Good evening, everyone. It's 10 to 9 on Sunday, the 9th of December, and I'm just going to give you your market breakdown for the week ahead. So, last week, following the China-US trade discussions, the dollar gapped down across the board, and overall, we did have quite a bad week for the dollar, with it losing quite a lot of strength. However, that isn't necessarily seen across all markets. For example, here we've got Australian dollar, US dollar, and as we saw, here's the gap up from the start of the week, but then the pair absolutely tanked through this 0.7250 weekly support level. So this would actually suggest dollar strength. However, I feel like this is more moved by the fact that initially at the start of the week it was looking like there was some sort of hope in terms of trade negotiations between China and the US. However, then as the week developed, investors kind of realized that this was largely false hope, and the 90-day truce that Trump and Xi Jinping had agreed to isn't necessarily a resolution in itself. It's just kind of putting off the actual tariffs. So the news wasn't actually taken as good as it was first thought, and the market fell. As you'll know, the Australian dollar is moved quite significantly. Investors do look towards fundamentals associated with the trade war, which is mainly the reason why we probably saw this pair tank. So investors heading out of the Australian dollar into other safe havens. So now here on the weekly, you can see that we are actually out of this consolidation. It's 3-week consolidation zone and back below the moving averages. So from the weekly perspective, we are looking bearish here. We did say that we saw a break of these September highs here. However, as I say, back below weekly support, which will now be used as resistance, so we could be looking to head lower. On the daily time frame here, you can see the bearish price action all week last week. We didn't have one bullish close, so price just melted through the moving averages, through that 0.7250 support, and then also through this daily uptrend. On Thursday, it looked like we could have potentially been reversing from that. However, if you see, the low formed on Thursday was actually a lower low to the low over here. So we were in this uptrend, higher low, higher high, higher low, higher high, and now we've tanked and formed a new lower low. So as the moving averages converge, looking to cross to the downside, we could be seeing price pop back up at the start of this week to walk back towards this trend line and the 0.7250 for a retest, before falling to 0.7150 to 0.7200 initially. Overall, we could be heading much lower, to be honest. Just have to wait and see. I mean, in terms of a Fibonacci, could be looking at something like this, which, as you can see, has that 0.7150 line up perfectly with our refined fib here. On the 8-hour time frame, after hesitation at the 0.7200 level that we met last week, price came back up, has tested the exponential moving average just below the 0.7250 and has melted to end the week just at this 0.7200. As you can see, we're back in this consolidation, this range between minor support and minor resistance. So as I say, we may still see a pullback. However, given the bearish nature of this candle, again, depending on how market opens, we may see price fall straight to the 0.7150. Now on the 4-hour time frame, we've seen these wick rejections and another rejection, another slight pullback here to close, but then close the week bearish. I am bearish overall here. However, moving averages potentially might meet once more before extending, making a new leg to the downside. If you see, we've had this low after this extended bearish leg. We had a low pullback to form this high. I do think that price could still pull back once more from this 0.200. If you see how price has responded in the past, rejection there, another rejection there at the end of November, price has come back, rejected it, and we will be wanting to see a break of this level, retest, before taking a nice easy 50 pips to the downside. So on to dollar yen. Oh, just want to point out on the Australian dollar before we move on that we do have Reserve Bank of Australia's Assistant Governor Kent speaking tonight, pretty much straight after the markets open. So he's speaking at 10:35 about monetary policy. So that will likely bring some sort of volatility straight into the start of the week. So some nice movements to get the week started, guys. Wake up nice and early tomorrow and see where that takes us. But on to dollar yen anyway. So as I've said before, we've been consolidating between this 112 and 114 level. Last week we had that dollar weakness and we closed within the moving averages. Now this week actually broke this previous low here, and we've also had a discrete lower high here. So we could actually be seeing price roll over here. I expect to see at least a touch of this uptrend. We could potentially see moving averages cross over in line with a break of this. If that does occur, I am looking towards the 110 as overall downside targets. But yeah, if that does occur, then we will essentially be free falling with this pair. Now onto the daily time frame. You can see we've got this nice daily uptrend. I did say that when price responded to this last week in line with this daily support region, we may have seen further consolidation within this zone. However, following Thursday's candlestick, price absolutely melted, formed this new low with this wick. So we've had a lower high and we've now confirmed this with a lower low. But then we did see quite a significant retracement back to this minor support level. Price came back up to retest the 113, which it's now rejected, to close the week as a Friday's session as a daily spinning top. I expect this week to continue downside to meet the 112 support level. There is potential to see price pull back up some further consolidation within this region before continuing downside, but we'll just have to wait and see. Like, I do expect price to pop back up, potentially tap this level once more before seeing a rejection to head to that 112 level. So this is the 8-hour time frame, and as you can see, on a smaller scale, we've had a high, low, lower high, lower low, lower high, lower low. However, as you can see, we had that massive rejection there, and this was actually following this is the 8-hour time frame. So we had NFP on Friday, which saw price melt downside, and then to end the week we came back up, recouped some of those losses. So price is just finding support on this 112.650, 112.65. However, we have broken those previous lows as mentioned previously, so I do expect price to just roll over. As you can see how price is struggling to break through this region, I wouldn't be surprised to see price come back up. So obviously we have this this short-term Fibonacci on here, which does see this as the refined Fibonacci retracement zone. However, I do expect this 78.6% to be broken at some point before heading lower. As you can see, this high, is actually a lower high to this over here. Yeah, this pin bar candle formed on the 6th of December does suggest that there's potential to see further consolidation with this pair, a continued push sideways. However, as mentioned, I am looking for the overall push towards the downside. Now here on the 4-hour time frame, you can see that we've had this 3-pin formation from this 112.65 level. So I wouldn't be surprised to see price make an attempt at the upside, but we would need to see a nice strong break back above the 113 to accept the move upside. So obviously a push back above this region would potentially see the moving averages cross over. We're looking for a retest and then continuation upside towards this 113.75. Otherwise, we'll be looking for price to reject this 113 to head down towards the 112 level. Moving on to Usdcad. And at the start of the week, we were looking like we were just heading straight towards the 1.35, despite the sizable gap down. Obviously we were caught on the exponential moving average, found support, took off before retracing. So I was expecting the 1.35 to be met. However, as specified at the start of the week, this is quite a crucial area of resistance, and as you can see, price has fallen back below that to close the week. Did still close bullish though, so we are looking at upside on this time frame. With that pullback, we may still see 1.3250 met once more. if I just take you to oil, then obviously here we've had that massive downward leg. Last week we saw price head towards that $55 per barrel, but then we had that massive pullback onto the daily time frame, back below the moving averages. They are converging. I do expect to see a little bit more consolidation with oil, a bit more of a push sideways. Here you can see price back below the moving averages after we took off on Friday. We have seen price pretty much take out all of those gains. So yeah, could be seeing some more sideways movement on oil. Where were we? Yeah, so on the daily time frame, here you had oil take off, Usdcad through the floor on Friday, along with obviously NFP, which wasn't great for the dollar. The price absolutely melted towards that 1.3250 weekly support, that should say, before retracing, and now we're just sitting on top of that 1.3320 daily support. So we have actually created, we are still within the uptrend. So if you see, we've got the high here, higher high. Obviously I did mention about how this high, it closed below previous high, so it did suggest that momentum was slowing down. But then following this higher low, we took off, and then we've now created a new higher high. We also had that massive rejection from this support level to close above this daily support. So we could potentially be seeing further upside here, looking towards a 1.3500. In terms of a Fibonacci, you can see how nicely that daily candle just comes into that refined zone and sharply rejects it. So that extension target does line up quite nicely with that monthly resistance level. On the 4-hour time frame, now this is a little bit more interesting. So we have seen price break through the moving averages, which are converging towards a downside crossover. However, as you can see, we've now had what looks to be a higher low forming. Price is just attempting to come back up to retest these moving averages, and we may see the 0.3250 support met once more this week. However, in line with the overall trend, I am looking for price to break back above these moving averages to then continue upside towards a 1.3500. Now finally, onto Gbp USD, the big one for this week. Obviously we have some fundamentals coming up on this week, quite important. On Monday we've got GDP figures as well as manufacturing data, and then on Tuesday average earnings and unemployment data, as well as that all important Parliament vote. So we'll be gaining some clarity on Brexit, which is essentially what I believe the market is looking towards to find direction. As you can see, we've been quite hesitant around this 1.2750 levels, 1.2700, pulled back week after week. So here we can see there's a slight fear of repeating myself here. Week after week I tell you the significance of this level, and despite being in an overall downtrend, we may well see the reversal come from this level. So last week closed as a spinning top, which shows even more indecision. The start of the week, it did look like we were falling, heading downside, but then price has managed to retrace to just close around this support level. So I think essentially with this pair, it's just a bit of a do or die. So either Parliament are going to accept the current deal, which could see this market take off towards a 1.3 level, or they're going to reject it, which could see price down at the 1.2500. Either way, we're going to be ready for that. So personally, I actually think the way the technicals are shaping up, we could be seeing price start a new bullish leg. However, fundamentals may well reject that and see price fall through the floor. So if we get a weekly trend line on here, it is quite steep due to the overall downward momentum we've been seeing, but that actually does see that we could have a price take back off to the 1.300, and bearing in mind we would be looking to see that volatility enter the market this week, that does line up quite nicely with a test of this trend line. So price action a little bit more choppy here on the daily. You can see price came down. We rejected that 1.2845 last week, but then closed as a spinning top. We then had this 3-pin formation from that all-important 1.2700 support, and then price popped back up above the weekly resistance. We seem to be rejecting the moving averages, however, and obviously Friday closed bearish. However, if you just look at the wicks of these candles, the downside wicks, they've actually been creating higher lows. So despite this bearish candle here, it failed to break the previous day's lows for the 1, 2, 3, that's the 4th consecutive day, which leads me to think that we could actually be seeing the market bottoming out here and potentially see the market turning upside. Now obviously that's not a certainty. We may see price come back up towards the 1.2845 before falling again. Further consolidation, we'll have to see as we're looking towards the 11th, which will be this candlestick just here. Very, very important moving forward. Obviously that could see the moving averages cross over and head up towards this 1.3 level. So in terms of a daily downtrend, be looking something like that, which again could see price up at the 1.3 major psychological level. Onto the 8-hour time frame, and we can see we've actually got this this upward trend line, and the moving averages were looking like they're about to cross over as price came up above the 1.2750. However, the last candle of the day on Friday took price back down below this level and towards a test of this uptrend, which we've now closed below. I've left this like this, this trend line like this, just to show you guys this is the trend line that I've actually that I initially had. However, so this scenario sees that this trend line has broken, and then obviously we've rejected that 1.2750. However, if we redraw this slightly and have it like that, we haven't actually broken this trend line. As you can see, we had a high which was a higher high to this one just here, and we've actually been creating higher lows. So we had this higher low on the 4th and the 5th of December. Then into the 6th of December we had a higher low, and then the low formed on Friday was actually a higher low. So the last candle closed indecisive despite the rejection of this 1.2750. So now we may be looking for price to pull back up to at least this level. Depending on how price responds to this level, we could see a breakthrough to then head up towards this 1.2845 and higher if we break that. Obviously, the moving averages are actually crossed to the downside, to the upside. So we would want to see them cross back over to the downside to confirm the move down towards the 1.26. We'll be looking down towards these lows first at 1.266 before 1.2620. However, while the moving averages are crossed to the upside, I am looking for price to respond to this trend line, head back up above this 1.2750 and break these previous highs around 1.2800. So in terms of targets, we would be looking past there towards 1.2845 at the top of this long-term consolidation. Overall, we are looking towards Tuesday for confirmation of direction in this market. I don't think anyone really knows about the outcome of that. However, I'll be keeping you updated on the website in the members area, so stay tuned, guys. Hope that all makes sense to you. As I say, I'll be back on Wednesday for your midweek breakdown, keeping you updated. Have a great week, guys.